Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. And if you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. You can find the link to the website in the description below. Marine shipping stocks, including today's income pick, Torm PLC, traded on NASDAQ under symbol TRMD, have taken a center stage with Houthis' attack in the Red Sea, forcing cargo ships to reroute around southern tip of Africa. With an estimated 30% of global trade passing through the Red Sea every year, worth more than $1 trillion, hundreds of container ships are now choosing the 10-day longer detour around the tip of Africa, a move that increases shipping transit times by around 30%. For example, since December 1st, 2023, shipping costs from Shanghai to Genoa have increased around 300%, while costs from Shanghai to Los Angeles have increased around 150%. John?
Yeah, exactly. And the Red Sea crisis may be 3 months old, but there's still no end in sight to the conflict. If anything, it appears things are getting worse. It was just recently that a missile attack by Yemen's Houthi rebels damaged a Belize flag vessel and its crew had to abandon ship.
If you are a midstream company like Torm PLC moving highly combustible product, you'll most likely want to avoid the Red Sea at this time.
Yeah, Torm is a leading pure play product tanker company with a fleet of more than 80 vessels designed to be configured to move everything from gasoline to diesel and jet fuel from refineries to their customers. Its fleet includes long range 1, long range 2, and medium range vessel classes. And just to give a little background on each one quickly, long range 1 tankers are designed to carry both refined products and crude oil. Long range 2 tankers are generally used on longer trade routes, such as carrying diesel from Eastern Hemisphere into the Atlantic. Meanwhile, a typical trade route for medium range vessels would be gasoline from somewhere, say, like Europe to the United States.
John, I was reading on incomeinvestors.com that Torm reported historically high TCE rates in the third quarter.
Yeah, Torm continues to report strong financial results, with company CEO saying, and this is a short quote, "The strong and sustained market for product tankers has resulted in historical high TCE rates," which is time charter equivalent rates, earnings for the first 9 months of 2023. He also said that the company expects a strong ending to the year, and that's 2023, driven by seasonal factors and continued favorable market conditions. Now, to that end, for the first 3 quarters of 2023, the TCE rates increased 23% year over year to $36,837 per day. Now, this resulted in TCE earnings growth of 26% at $817 million. Now, year-to-date earnings before interest, or EBITDA, increased roughly 30% to a little more than $613 million. Now, during the third quarter, Torm entered into an agreement to acquire 8 long-range 2 vessels for around $400 million. The first was expected to be delivered in the fourth quarter of 2023, with 7 coming in the first quarter of 2024, and this will bring its total fleet actually up to 93 vessels.
This company continues to reward buy and hold shareholders.
Yeah, thanks to its strong cash generation, Torm was able to return, I think it was $123.2 million to its shareholders as dividends in the third quarter. The company's board declared a third quarter dividend of $1.46 per share, or $5.84 per share on an annual basis. That's for pretty, at current prices, for the yield of 17.09%. Now, because the company's dividend is tied to profitability, it will fluctuate from quarter to quarter. Torm actually had the misfortune of announcing its dividend during the opening days of the 2020 health crisis. Suffice it to say, the financial windfall did not last long for income investors, with the board suspending the payout for 2 years. Before the pandemic, it paid out 85 cents per share. In August 2022, it resumed its dividend with a payout of 58 cents per share. And it's been much higher since then, $1.46 per share in the first quarter of 2022, $1.50 per share in the second quarter of 2023. But for now, the dividend is safe, as long as the company continues to make cash, of course. And right now it's making boatloads of cash. The dividend payout ratio is just 80%.
Lastly, let's talk about how is TRMD stock doing?
Yeah, well, typically an ultra-high yield dividend yield is tied to a lower share price. That's because yield and share price move in opposite directions to each other. This isn't the case, though, with Torm. TRMD stock actually hit a new record high of $37.11 on January 29th. And as of this recording, TRMD stock is up around 35% over the last 6 months and 10% year to date. And it's actually up 31% year over year. Bigger gains are expected, with Wall Street analysts predicting TRMD stock to hit as high as $42 per share over the next 12 months.
John, thank you so much for your insight. Just to recap, Torm PLC is a pure play product tanker company that's reporting strong financial results, big profits, and recently resumed its ultra high yield dividend payments. Thanks to its growing fleet, rising freight costs, and crude cargo growth, the outlook for Torm PLC and its dividend remains excellent. That's it for today. And now make sure to go to incomeinvestors.com to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to the website in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.